Hello, amazing people. Welcome to yet another segment of my weekly Forex forecast. Last week, I was unable to, share my screen with you guys due to some unforeseen circumstances. That was the reasons why I was unable to, share my screen with you guys. But this week, I will be sharing my screen with you guys, sharing two solid pairs with you, which is, Euro USD and Gold Spot USD. These are two solid pairs that I will be, sharing with you guys. And before I dive right into today's analysis, I really need to quickly say this real quick, guys. We just have 2 weeks left to 2025, which is a new year. And no matter what, trading challenges you might be going through in your trading journey, you just have to, understand the reasons why you started. Okay, there are a lot of naysayers which definitely don't basically understand what you're working towards. So you need to basically understand the fact that not everyone will understand what you're working towards. So you just have to keep pushing, because by this time next year, I believe a lot would have happened. Okay, just believe the reasons why you start and just keep moving. Don't listen to anyone saying you should stop what you're working towards. Just keep moving, and I believe you will have a solid reasons and a good reasons to appreciate yourself at the end of the day. So having said that, guys, I will dive right to my screen and show you what I have for you guys for this week. Okay, so let's go right to my screen so I can show you some possible trade entry for this new week, guys. Euro USD, I'm on the monthly time frame, and basically, you know what we use the monthly time frame to do? Just to know the direction of the market. Basically, looking at the chart, we can see the overall trend of this particular pair, which is Euro USD, is on a bearish trend. You can see it's pointing downward. So having said that, I need to quickly explain another basic thing for us here. Is I want to bring out my fib retracement level just to explain what is currently happening so you can have a clear picture of what is going on the charts. So as we can see, this is a decent retracement. After this drop, okay, this massive fall, there was a retracement. So all this action happening here was a build up to continue what? Its bearish move. Okay, I haven't explained that. I need to quickly explain this basic thing as well. We can see that the price formed a triple top right about here. Okay, price formed a triple top, and basically we know what a triple top is. Is basically what? A reversal pattern. Here we have a double top here, and here price definitely creates a triple top. So reasons why I'm explaining this is I need to show you this particular level where price is currently at. It's the neckline of the triple top. That is where price is currently at. So having explained that, let me proceed with this analysis. So I will scale down to the weekly time frame. This weekly time frame, you know what we basically use the weekly time frame to do. We use the weekly time frame to mark out our key levels. So how do we mark out our key levels? We use the help of the obvious lows and high. And another name for that is the support and resistance. These are supports. These are supports. These are supports. And this is a resistance. You see, these levels are obvious. So we use the horizontal tool to connect them where those highs and lows met. So we use the horizontal tool. Okay. We use the rectangle tool rather. We use the rectangle tool. We use the rectangle to connect those levels together. Those are the words. That is our key level. See, this is another low resistance support. You see, these levels are obvious. These levels are what? Obvious. These levels are obvious. Okay, these levels are obvious. So these levels are obvious. We use our rectangle tool to connect them. So these levels are very obvious levels. So these are highs. I need to, these are highs, these are lows, these are highs, these are lows. Okay, let me readjust it. I think I will have to separate these levels. There is another level right about here. Yes, I think this is a decent one. So having done that, let me scale down to the daily time frame just to use it to adjust those levels that was just being plotted. So don't forget about these key levels. These are key levels. These are key levels. And those key levels are major levels which price has respected over time. So these levels we need to pay close attentions to these levels. Okay, we need to pay close attentions to this level. So our daily time frame, we use it to adjust the key levels being drawn on the higher time frame, and as well mark out some, what is it called, some minor levels. These are minor levels. Okay, this is another minor levels. Okay, this is another minor level right about here, and we have another minor level, right? You see these lows, these lows, these lows, these are highs and lows, so we need to connect them on the daily time frame. Okay, having explained this, we are currently at the neckline. If you remember that I explained that this is the neckline right about here. This level is a key level, and I want to say we should pay close attention to this level because there's an high tendency that this level will not give up without a fight. This particular level will not give up without a fight. So we need to pay close attention to this particular level. So another thing might tend to happen at this level before I proceed to the 4-hour time frame. You see, this what actually happened there that touches the, what's it called, moving average might as well happen. The price might tend to come back to touch this moving average. Okay, this is a resistance level right about here, and price might want to pull back to come and touch the moving average as well. Okay, so let me scale down to the 4-hour time frame. The 4-hour time frame will show us more information that we need. Okay, on the 4-hour time frame, we can see here that the price is currently in a range. Okay, the price is currently what, in a range. The moving average tells us that we are in a range because we see the moving average pierce through the price. Okay, and when this occurs on the chart, we basically know that the price is currently in a trend. So now, one thing I don't encourage when it comes to analysis on the chart is when price is in a range, I will advise you stay out of it. Okay, that is just my basic advice, staying out of the chart. And I will tell you one particular reasons why I suggest we let's wait for price to clear out this zone. Okay, before I proceed with the explanation, price might tend to because we have this right about here, there is a gap here. Okay, there is a gap here. One, there is a double top formation playing out here as well as a result of what's it called, the range, the current price action, which is the price is currently in a range right about now. So now the reasons why I say we should pay close attention to this is, let me scale down to the 1-hour time frame. Let me scale down to the 1-hour time frame. So now I'm on the 1-hour time frame. Okay, and on the 1-hour time frame, we are looking at a reversal pattern right about here. This is a reversal pattern. Okay, this is an inverse head and shoulder pattern. Okay, trying to play out here. Okay, this is basically the neckline that price is showing us right about here, right? This is basically the neckline that price is showing us. So price might tend to do something like this because the overall trend is a downtrend. Okay, price might tend to do something like this. Okay, get to this level, acted as if it wants to create another higher low. Okay, and price might create a reversal pattern somewhere around it, or price might tend to continue its downtrend. So at this level, we need to approach price carefully because price is currently at what, at a key zone. Okay, this is a neckline, and price is currently at the key zone because this gap right about here, I have an what's it called, prediction on this, that price might gravitate towards this gap right about here. Okay, so anything that tends to happen here, I won't advise you guys to take a trade on this, but if you don't want to wait, if you decide that okay, you don't want to wait, that you want to take any trading opportunity that comes. So now let me show you what you tend to do. So we have to patiently wait for price to get to this level, okay, to give you an higher low at this level, okay. After giving you an higher low at this level, okay, wait for a continuation candlestick pattern to form here and generate a buy signal. What do I mean by a buy signal here? You see this, something like this, an engulfing candlestick. An engulfing candlestick must, keyword, must print on this level right about here. Okay, an engulfing candlestick must print after giving you an higher low around this level. An engulfing candlestick must print around here and wait for the engulfing candlestick to close outside here. Okay, wait for the engulfing candlestick to close outside here. Once it's closed, then you can take an entry here, put your stop here, and don't forget your proper risk management. Okay, then you can do something like this. That is if price decide to go back up. And I personally, I won't be taking this trade. Okay, I won't be taking this trade. But if you decide that you don't want to wait for this, because I personally will wait for this zone to be cleared out, because I want to take a clear setup. So because this is a range for me and I don't like trading a range. Okay, I like to trade when the market, when the coast is clear. So I'm just giving this analysis based on if you can wait, if you can't wait, rather, if you can't wait for price, do get out of this, this zone right about here, if you can wait for price to, clear this level out. Okay, that's the reason why I'm giving you this analysis. So all you need to do is, wait for price to give you an engulfing candlestick and then take a bullish entry from here. Okay, and your stop can be below here. So this level, once your price gets to this level, take a profit, take partial profit and move all your, what's it called, stop loss to break even. Protect your capital. Okay, protect your capital. And the next thing you need to do is this level right about here. Okay, you can use your trailing stop. Okay, once price has definitely, you take get to this place. Once price gets to this place, take partial profits, move all your stuff to break even. You'll be risk free and manage this trade carefully, because anything can happen. Anything can happen at this level. So there's an uncertainty surrounding the market, so you can't decide what will happen next. So basically, I personally won't be taking this trade, but if you can patiently wait for price, to get out of this zone. So that's the reason why I'm sharing this entry with you guys. So that is that for Euro USD, and I'll move on to the next pair, which is, what's it called, Great Britain Pounds USD. Great Britain Pounds USD. For Great Britain Pounds USD, I'm on the monthly time frame. And basically, we know what we use the monthly time frame to do, to know the direction of the market. Okay, and as we can see, we see the overall trend is pointing downward, which is a bearish trend. Okay, now I need to show you another thing that actually happened here. I'll bring out my field retracement level from swing high to this swing low. You see, price tends to pull back, okay, at the level of 78.6 level, okay, 78.60% level, okay. So which clearly shows us that we are, price is currently done with this retracement. This is basically a retracement, okay. So now I will scale down to, what is it called, the weekly time frame. And basically, we know what we use the weekly time frame to do, to mark out our key levels, to mark out our key levels. And how do we mark out our key levels? We are able to mark out our key levels with the help of the lows and highs, where they met. So you see these lows, you see this resistance right about here, this highs right about here, these highs and these lows where they met. So we use our rectangle tools to know to connect them. This is another high, this is another low where they obviously met. You see where they met. So we connect them together with what, our horizontal, our rectangle tools rather. Okay, you see this is another level right about here. So, and you see there are other levels right about here, but I won't want to bore you with mapping out with this key level. So let me scale down to the daily time frame. So Let me scale down to the daily time frame. With the daily time frame, I will adjust these levels. Okay, what I need to do is adjust these levels. Okay, okay, I think that's properly drawn. A moment please, guys. Okay, okay, that is that for that. So for this particular level, I need to quickly adjust this level before I proceed with my explanation, because these levels are very important. These levels are very, very, very important. They are very important. So now on the daily time frame, we are on daily time frame, and we as we currently see, price is currently at the, what is it called, a strong level, which is a major level. So bringing out our field retracement level, we see this is just a decent retracement, and we are expecting price to continue with the sell trend, because we can see the moving average used here as a resistance level, and the moving average, is currently approaching this, what is it called, the price at this level. So let me scale down to, what is it called, the 4-hour time frame. Let me scale down to the 4-hour time frame. And on the 4-hour time frame, we can see another information, which there is a contradiction here. And the simple contradiction here is, let me delete this field retracement. There is a pattern forming at this key level. See this level right about here? It's a very strong and a key level right about here. This is a reversal pattern forming at the key level. This is a major level right about here. And we have a reversal pattern forming at this major level right about here, and this requires us to pay close attention to it. This is a reversal pattern, an inverse head and shoulder pattern. Okay, it is an inverse head and shoulder pattern. Okay, this is an inverse head and shoulder pattern. So how do we treat this level? I will need to delete this so I can explain what I need to explain. So I'll bring out my rectangle tools to connect this shoulder together, and this is the neck line. Should I use it as, yes, this is the neckline. This is the neck line. This is the neckline right about here. Because as we can see, a moment please, guys. As you can see, price broke out of this neckline. We tested it. Okay, we tested it, acted as if it wants to go long, and price definitely resumed its original trend. So now two things might happen at this zone right about here. Price might tend to pull back. Okay, to expect this, what is it called, moving average before it continues the bearish trend. But I favor the bearish trend more. Okay, I favor the bearish trend more. So anything that happens within this, what is it called, range, within this range right about here, I'm not interested in it. The only way I will take this trade is I will patiently wait for price to break out at this zone. Okay, to break out at this zone. Maybe so now we have, if I have a lower high right about it, then I can take a short position at this level. Okay, I can take a short position at this level. Before I proceed to conclude on this, let me scale down to the 1-hour time frame. Maybe we can see a different information on the 1-hour time frame. Okay, okay, and as we can see on the 1-hour time frame, price was unable to clear this zone. Okay, price was unable to clear this zone. I can't see, this one is not a clear zone. It's not a clear low, rather it's a low, not zone, a low rather. So this low was not properly cleared. Okay, now I will have to put this up here. So this is the two level that I will be looking at. Okay, wait for price to take out this level. Okay, if it gives you a lower high, then you can sell. Okay, so a lower high, then you can sell. Just patiently wait for price to clear this level. Okay, wait for price, because that is the overall trend. Patiently wait for price. Patiently wait for price. Patiently wait for it, because I won't want to give you any buy option at this level, because if I do give you any buy option at this level, Anything can happen between this one, but we have to patiently wait. Just patiently wait. So what actually happened there will not happen to you here. You see, price took out, what is it called, the neckline, give us a decent retracement, and as well did a double bottom right about here. But price tends to respect, okay, price tends to respect the original trend. So what happened there might tend to happen here. Okay, price might tend to, give you something like this. Okay, this similar structure. Price might tend to give the same structure here. Okay, so you just have to, be careful at this level. So I'll be looking for a sell opportunity at this level. Okay, so that's what basically I'll be looking for. So Great Britain pounds USD, that is that for Great Britain pounds USD. So I want to say a big thank you to you guys for sticking this long to the end of this analysis. So that is just the basic thing I want to share with you guys for this week. And don't forget to like and subscribe to my YouTube channel. It will help my YouTube channel grow, and it will give you an edge over people who did not subscribe to this YouTube channel, because you will get an instant notification anytime I drop any video on here. So guys, I will see you next week on my Forex forecast. Okay, so I wish you a profitable week ahead of you guys. So stay blessed. I will see you next week. Bye for now, guys.